Welcome back to another top-notch video, guys. This week we're going to be talking about the end of January into February for our weekly TSP review. As always, we'll go through each one of the funds and ETFs and see where we're at, and we'll get right into it. So for this last week, guys, we had quite the most interesting week. I talked into some of the weeks leading up to this about safeguarding some of our capital. And we did have quite a drop this past week. If you did safeguard some of your capital, way to go. Pretty significant little drop here in this first year. We are still up for the year, but just know that we dropped a good percentage, quite a few percentages down. It was our first negative week in 11 weeks. So just keep that note in mind. So this was our C fund for the week. As you can see, quite a negative drop off. Moving into here this past week of February, January 28th to the February, just a massive loss in capital. Now, if we go below this line here, that's when we'll really start to get worried, but this looks like normal volatility bouncing back and forth. I would expect next week to go a little bit lower maybe and hit this line and then start to bounce back up again, so just watch for that. How we doing on our charts with IVV? On the weekly, we had almost all of the energy go down for the most part, and a big spinning top up here on the charts. Now this usually signifies a change in trend, so be aware of that. If your money's not in the C fund, I would not put it in the C fund at this time. We're looking at least another couple weeks of negative activity, and we just had a 2-day negative cross here. So if you don't have money in the C fund right now, I wouldn't leave it in the C fund. If you do have it in the C fund, maybe move it to one of those life cycle funds to safeguard some of your capital for the time being. But we're looking at some very negative charts here for IVV or the C fund. Moving on to our S fund, the Dow Jones. Almost looks like the exact same chart we got here. A lot of negative activity for this last week. If you ended up getting caught in this, it looks like we're almost close to our bottom, so you don't want to miss out. In case this chart goes up, I wouldn't suggest pulling your money out of this chart. But if we look at VXF, we have a very big down bar here of energy and a spinning top. So we could see a loss in capital here, guys. I could see this going all the way back to 110. But at this point, if you're in it for the long run, I just wouldn't recommend pulling out your money, or if you want to safeguard some capital, maybe putting it in one of those life cycle funds. But for us, this is where our money's at, and even though the charts don't show good things to come in the weekly or the 2-day, we're going to leave it there, maybe just not look at our balances for a bit, because I just don't see this going positive for a while. Usually when we get a negative bar or negative energy, it lasts anywhere from it could be a week to 3 weeks, and the reason we ended up putting our money in the S fund is we had this. Now, charts are not perfect, guys. You got to remember that. But we had this little up bar here, and that signified for us to put in a buy on Tuesday. And then Tuesday through Friday, we ended up losing some capital here. But when the markets are down, that's not a time to panic and pull money out, especially when the long-term charts look favorable. So, yes, we look down on the weekly and the 2-day, but long-term, I think we're just going to eat this one for the month of February, and we're going to continue on nice and strong. Let's look at some of our other charts. International stocks, EFA or the I fund. So for our I fund, EFA, we saw about the same result. The dollar was getting stronger this past week, so that drove down our EFA fund, or international markets, and we still got a lot of room to go down here, guys. I would not suggest putting your money in EFA at this time. We're not invested in EFA, and it's just not somewhere to have your money. If we see a bounce, we might end up putting some money somewhere, but no bounces yet, and so we'll just continue to hold out and wait. We'll look at EFA on the charts real quick. Same kind of picture, guys. Big spinning top up here, loss of energy here on the 2-day. Looks like we just had a 2-day cross, and we did. So be aware of that. Might be a time to put, if you have money here, I would probably suggest putting it in a life cycle fund to safeguard that capital. Or if you ate this and you want to hold it long term, just know if you're going to hold it long term, it could be anywhere from the whole month of February to the whole month of March. We don't know how long this could last. So now is the decision point when we have this crossover now, not 2-3 weeks from now. You got to decide if you want to move stuff now, and go from there. And lastly, let's look at bonds. Bonds this entire year have been doing pretty terrible, and as you can see, they continue to be very low. I am very glad we did not buy in bonds or suggest bonds anywhere in 2018. I don't know how low this is going to go, guys. There's no resistance lines. I honestly just see this going. This is not a place to put your market. Even with this little drop in stocks, this is just not a place to have your money at all. If we look at it on the charts, the probability shows that it's probably going to continue down this trend that it's on. We are outside the Bollinger Band, so we could probably see a little bit of positive energy this next week in bonds. But with these big negative energy charts still going directly downhill with no positive correction, I would not have my money in AGG at this time. Even the 4-hour chart, let's look at it, still negative. All three charts are negative. Not a good place to have money right now in AGG. So just be aware of that as we're continuing on. Another thing I'd like to just mention, guys, with the markets now, because we've had such low volatility, we could see these charts just being a little bit messed up. Charts are not perfect, guys. They just point to probabilities, and they do not predict what the stock market will do. All these charts show is a probability of what is more likely to happen, and that's all they do, guys. So just keep that in mind. No one can predict the stock market. So hopefully we'll see. I think with all the volatility, we could see a jump back up, but I'm not sure. As for our allocation, we did end up going 100% in the S fund, and so that's where we are allocated. We did eat a number of the losses this week. We missed Monday's losses, but ended up with Tuesday, Wednesday, and Thursday losses, and Fridays. And then we had a contribution allocation on Friday for February, and that also went into the S fund. And what we're going to do for our strategy is we're going to hold that S fund long term, and just take this as these down days as almost as a discount for stocks, since we bought in on this February stock, and hold it. I don't know how long it will last. It could last month of February. It could last from February, March, April. Not really sure, but overall, monthly and yearly charts look very, very good, guys. So I'm not going to pull it out, because if you miss a couple of the very good days and you ended up with a couple of down days, you're going to end up not doing as well with the markets. So we're going to hold that S fund and go from there. If you're not comfortable holding the S fund based on the analysis we did, I would suggest going to maybe a life cycle fund, such as the 2030 fund, to safeguard some of your capital until charts look a little more favorable. Once again, this is another top-notch video. We'll see you guys next week. Bye-bye.